Welcome everyone to the Top Rated Seller webinar for February 27th, 2013. You are here for the Lowdown on taxes for eBay sellers. This is session 2, the intermediate version. So if you're here as a beginner, get ready to be wowed by the content. Today's webinar is going to be presented by Cliff Ennico, who is a tax and legal expert. He's an attorney and an eBay author. And our other presenter is Laura Messerschmitt. She is a financial industry expert from Outright.com. Housekeeping. We all know there's always housekeeping. This webinar is being recorded, so don't panic if you miss something. We'll have it up on our YouTube, usually within 24 hours, definitely within 48, and you'll be able to see that link in your email. We will be distributing the presentation slides. They'll be available as a PDF that you can download, and that will be on our website at pagemage.com/top-rated seller webinars. If you're having audio problems on the computer, your best bet is to try calling in with our call-in number and PIN with your telephone. And if you're on the phone having audio problems, sometimes the easiest solution is simply to hang up and call right back in and get a new line. Remember, we want you to stay connected with Top Rated Seller webinars. We have a newsletter that goes out that keeps you informed of all the news, what's the next webinar, when is it, and when the replays are up. You can sign up for that newsletter at pagemage.com/top-rated seller webinars with lots of selling tips and all the information you need to stay informed. The other way to stay connected to Top Rated Seller webinars is on Facebook. We have a very active Facebook group. This slide says 530, but I think we're getting close to 600 now. We would love to have you join us as soon as the webinar is over. Karen and I will get over there and approve people. You can participate in the conversation, ask questions. Facebook.com/groups/TRS webinars. Find us there. Our next webinar is coming up soon. You can sign up through our newsletter at pagemage.com. Top Rated Seller webinars, again, is where you'll get that info. But the next webinar we have planned for you is on Wednesday, March 13th. It's an hour earlier than this one. It's at 10 p.m. Pacific, 1 p.m. Eastern Time. And it's going to be given by the eBay Seller Protection Team. So all of you eBay sellers that want to hear about how eBay is protecting its sellers, make sure to join us for that one. And how do you get these great webinars? Well, you get them from our sponsors and our connectors. The connectors are me, Kat Simpson from thatcat.com, and Karen Locker from solutionsforecommerce.com. We have to be sure to thank our sponsors, because without them, we wouldn't have the webinars. Who are the sponsors for Top Rated Seller webinars? eBay Radio, where you've got the grift at 11 to 2 Pacific Time every Tuesday and Thursday. You can find them at ebayradio.com. Our other sponsors, Outright.com. Put all of your accounting on autopilot with Outright.com. Terapeak is another sponsor. eBay sellers that use Terapeak make more money on every sale. Check that out at terapeak.com. We are also sponsored by PageMage, and PageMage's new app, the Smart Gallery, lets you cross-sell targeted items in your eBay listings by category, keyword, and lots more. You choose with PageMage Smart Gallery. Stamps.com, the post office on your PC, the original version. You can import orders from multiple marketplaces, and Stamps.com has a free version just for eBay sellers. Now that you've heard about all our sponsors, I'll turn it over to our presenters. Hi, Laura and Cliff. How are y'all doing?
Hey, Karen and Kat, how you guys doing?
We're hanging in there. Karen's freezing and I'm sweating, so what can I say?
Well, we had things. I was in Phoenix, Arizona last week, and it was actually like 55 degrees the whole time that I was there. But it was funny, after I left to come back to Connecticut, it went back up to 80 degrees. So I don't know what that means, guys. I'm starting to kind of like look behind my back now, see if there's if there's a guy wearing a shroud and carrying a scythe. I'm getting a little worried about this.
You never know.
Okay. Well, first of all, welcome to the program for everybody. This is an intermediate program, but frankly, you don't have to be intermediate. Most of us are not intermediate. At least we'll admit to it. We're going to be covering a little bit more advanced topics, but with only 6 weeks to go until April 15th, it's a good time to be doing this. We're going to be covering some advanced income tax stuff. We want to talk about estimated taxes today, dealing with employees and contractors, 1099 forms, sales and use taxes, and special rules that relate to drop shipping and consignment sales. So with that, let's go on to the next slide, which is my favorite slide, the disclaimer slide. The most important thing to take away from this, I guess there's two things here. is that Laura and I were talking about stuff that's, while we are talking about legal and tax information, and we are going to be answering questions at the end of this program, we are not giving actual advice to you. So if you hear us say something, you think it's a great idea, and you listen to us, and it does not work out, you get audited by the IRS, you end up filing for bankruptcy, your spouse divorces you, and you end up living in a diaper box under the Brooklyn Bridge, it's not our fault. Okay, we are not giving actual advice that can only be given by a lawyer or an accountant who is competent in this area and admitted to practice in the state where you reside. So with that out of the way, let's move on. Let's talk about income taxes first, and let's talk about numbers, first of all. There are $3 amounts you have to keep in mind when you're dealing with income taxes, selling on eBay or doing any kind of self-employment thing. Number one, if you make $1 or more in profit, now that's not gross sales, that's profit, you must pay income taxes. A lot of people think there's some kind of minimum amount below which you're not liable for tax, and that is not true. There is a minimum amount below which you don't have to file a return, but just about everybody is above that income level. I believe it's $10,000 or something like that. It's a very small amount of money. Most people could not live on the amount that is. But for purposes of Schedule C and self-employment stuff, if you make $1 or more in profit from a business, you must pay income taxes. There is absolutely no floor. The second number you need to know is $400. If you make $400 or more in profit, again, not gross sales, in profit, you sold $400 more than you made, than you spent on stuff, you must also pay self-employment tax, which is FICA and Medicare, FICA Social Security. Those of you who used to work in for a corporate job, you know that when you got your paycheck, all these crazy taxes got taken out of your paycheck. Now that you are self-employed and you make $400 in profit, you must start withholding those amounts from your paycheck, the same as you did when you were an employee, although with one very important exception. As a self-employed person, because you do not qualify for unemployment benefits, you do not have to pay the federal FUTA, the FUTA tax. It's only Social Security, FICA, and Medicare that you have to pay. The third and last number you need to know is $1,000. Now, this is not $1,000 in profit. This is $1,000 of tax liability. Once you've done enough business on eBay or Amazon or anywhere else that you owe the IRS at least $1,000 for the year, well, the good news is there are no more taxes you have to pay. The bad news is you have to now, the IRS does not want to wait till April 15th of next year to get their money. They know that you're going to blow it at the track. So they want you now to start paying in quarterly installments the dreaded estimated taxes, which are due April 15th. Don't you love that? You just finished paying your taxes for last year, and now you're being socked for the first quarter of this year. June 15th, they only give you 60 days for that second payment. September 15th and January 15th. The good news here is they give you 15 days after the end of the year to clean up whatever mistakes and messes you may have made during the year. It's very hard to predict when you will hit this amount, but what I usually recommend for eBay sellers is when you start getting around $5,000 in profit, it's a good idea to talk to your accountant and see if you've crossed the $1,000 threshold. For the vast majority of eBay sellers, estimated taxes kick in somewhere between $5,000 and $8,000 in profit. So let's talk about these dreaded estimated taxes. And by the way, welcome to the club. We all pay them. I pay them myself. There are two ways to calculate estimated taxes. There's the safe harbor method, and then there's the SWAG method. SWAG method the SWAG stands for either silly wild-ass guess or scientific wild-ass guess, depending on your background. But let's talk about the safe harbor first. The IRS says that if you really don't know how to handle estimated taxes, as long as you pay 110% of your last year's tax liability, you're okay. So let's say that you paid the IRS $10,000 in taxes last year. What you can do, $10,000. What you can do is add 10% to that, $11,000, divide by 4, and pay that amount each quarter. And as long as you do, they won't hit you with penalties. That's called the safe harbor method. If you are in a business that's growing at least 10% every year, this is probably the best way for you to calculate your estimated taxes. But since most of us do not have businesses that grow 10% every year, our sales are all over the place. Sometimes we're up, sometimes we're down. Most of us, including myself, use the SWAG method. Basically, what you do as each tax date comes up with the swag method is you do sort of a mini tax return. You calculate how much you made, what your deductions were. You do your best efforts to calculate exactly what your tax liability is for that particular quarter. You pay that amount to the IRS, and you pray to God that you're right at the end of the year. That is how most of us do our estimated taxes. If you're in a business where income varies over time, that is probably the best way to pay your estimated taxes. Here's one little piece of advice. We don't really give advice in this program, but here's one piece of advice that I always give in all my eBay programs. Learn how to escrow. If you're liable for estimated taxes, learn how to escrow for them. The only problem with paying estimated taxes, folks, there's really only one problem, and that is when a tax date comes up, you realize that you owe the IRS $10,000 and you only have $2,000 in your checking account because you haven't been disciplined. You've been spending all the money you make. That is a problem, because when you find yourself in that problem, you have to do one of two very stupid things. Either you lie to the IRS and hope to God you can make it up in the next quarter, which is a very dumb thing to do. That can get you into criminal trouble with the IRS. Or you hit up your credit card to pay the extra $8,000 and hope to God you can pay it off by year end. That's also a very dumb thing to do, because you're paying, 21, 22% per annum interest on those things. So here's one piece of advice. Learn how to escrow. Here's how you do it. At the end of each month, total your gross income. Don't worry about deductions. Don't worry about anything like that. Just total your gross income for the previous month. Take a percentage of it. I recommend somewhere between 30 to 40%. Once you've done this a couple of years, you'll know exactly how much you need to withhold. This all depends on your deductions, your credits, what tax bracket you're in. But at least 30%, I think. Take a percentage of your gross income and put it in a separate interest-bearing account, a savings account. You want this account to bear interest. Keep doing this every month, and then as each tax date comes up, you use your swag method. You calculate what you think you owe the IRS, and then pay it out of the escrow account, out of the interest-bearing account first. And then whatever's left over, if there is anything left over, if you have a shortfall, take it out of your main business checking account and start escrowing a little bit more. This is how you do it. And after about a year or two, you should be able to get to the point where you know exactly how much to escrow. Do it. That way you will always be certain to have cash on hand to pay your estimated taxes with. And you won't find yourself in that awful situation where you have to either hit up your credit cards or lie to the IRS. Those are two very dumb things to do, and you will have no choice between them unless you do this. So a little advice from this advice will actually save your life tax-wise. Moving on, here's how Outright helps you calculate your estimated taxes. I'll let Laura chat about this for a minute, but the one point that she and I both agreed on is even this is not exact. In order to get an exact computation, and by the way, this is a swag method calculation, but because Outright is keeping track of your income and your deductions, it can get pretty close to your estimated tax liability, but it's not going to be exactly on the mark, because things like the home office deduction and other more complicated deductions you really can't do with Outright. Laura, am I correct about that?
Yep, that's correct. It's meant to be a swag, and you'll have to adjust it a little bit based on the deductions that you're taking. Like, for example, if you're taking a home office deduction, that would reduce the amount that you would owe, and Outright wouldn't know that. But it does give you a little idea of where you should be, and gives you an approximate amount. And that's under taxes, and then you click on the quarterly taxes tab to see that.
Okay, as we say, it's close enough for government work. Thank you, Laura, very much. Let's talk about the forms and deadlines for income tax. If you are a sole proprietor, that means it's just you. If you are in a partnership with your spouse, or if you are a single member LLC, an LLC with only one member, you file Schedule C on your Form 1040. For other partnerships and LLCs, let's say you're in a partnership with your sister-in-law, not a spouse, you have to file Form 1065. These are all due on April 15th. If you have a corporation, either regular or subchapter S, you have to file Form 1120 or 1120S. Now, note the date. These are due March 15th, not April 15th. That deadline is coming up in a couple of weeks. You can extend the filing dates, all of these filing dates, by 6 months, just like you can with your individual tax return. But just like an individual tax return, you cannot extend tax payments. If you owe the IRS, you must make the payment by either March 15th or April 15th, or you will incur penalties. They'll wait 6 months for the return, but they ain't going to wait 6 months for their money. Okay. Most important point about income tax, there's really only two ways that you can foul up your tax return. Either you don't report all your income, or you get too aggressive in reporting your deductions. If you're going to make mistakes on your tax return, overstate your deductions. Do not underreport income. The IRS really, really hates that. When they find out that you've underreported income, that's when the baseball bats come out. They understand, believe it or not, the IRS people are actually pretty real world. They understand that the tax laws are very complicated. Some of the rules for some of the deductions are very complicated. Even professionals make mistakes sometimes with this stuff. But they do presume that all people that are adult Americans know how to add and subtract. You must report every penny of income. If you are in a business where all you get is checks, credit card payments, and PayPal, there's no place to hide. They will catch you on audit. The first thing they will ask for in an audit, they will ask for copies of your checkbook statements, your merchant account, your credit card merchant account statement, and your PayPal statements. They're going to ask for that, so there's no place to hide. If they add up all those things and they see that you didn't report all of that, the baseball bats will come out. If you're in a business that involves lots of cash payments, where there is no record of payment, you will be audited sooner or later. That's just something you have to accept. So, for example, waiters, restaurant people, a lot of these people get audited because there's a lot of cash payments going on. That doesn't really apply to eBay sellers that much, but keep in mind you must report all your income. Second point, and very important, the IRS is really going after this year. When you file your tax return, you have to attach a whole bunch of documents to it. Your W-2 from your day job, your 1099s, your 1099-K from PayPal if you've got one. The last thing you should do before you file your return, before you mail it out, take an adding machine or a calculator, total up all the amounts on those documents. Total up all the W-2s, all the 1099s, all the K-1s if you're in a partnership with somebody, and make sure that the amount that appears on line 1 of the tax return, your gross income, is at least that much. The IRS computers are going crazy on this now. If you report $100,000 as income on line 1 of your 1040, but the total on all your 1099s and W-2s and K-1s totals 110, that will be an instant audit. You will automatically be audited, and it will not be an easy one because they got you on that one. There's no way to hide up. The last thing is make sure that if you are reporting cash payments, make sure you have backup documentation for all cash payments that were made in cash, receipts, whatever. Make sure you have something. Okay, next slide. Okay, let's talk about, we talked about reporting income. Now let's talk about those deductions. It used to be that accountants would volunteer information about deductions. They would say, hey, Cliff, wink, wink, wink. You go to church every week, right? Wink, wink, wink. And when you do, you put at least $20 in the collection plate, right? Wink, wink, wink. They used to do stuff like that. They don't do that anymore now. The IRS is really, really going after tax preparers who get a little too creative. And they will not volunteer that kind of information anymore. It's up to you to know what deductions you can take when you run a business of your own, whether it's selling on eBay or Amazon or anything else. They won't. What you need to do here is you need to build a library of checklist books. There's some very good books out there for small business owners that basically do nothing but list the deductions that you can take. I actually have a list in the back of my eBay Sellers Tax and Legal Answer book. I actually have done a lot of homework on this, and I came up with a list of about 200 common deductions that eBay sellers can take. So for $19.95, that's a great investment. That's $19.95, by the way. Cheap, as my father used to say, cheap at half the price. What you do is build a library of checklist books, go through them, and if you see a deduction that you think you may qualify for, ask your accountant whether or not you're eligible for that. Don't get me wrong, I'm not knocking accountants. If you ask an accountant a direct question, can I take the home office deduction, they will give you the answer. What they will not do is volunteer that anymore because they're watching their own liability. They don't want to lose their license. But if you volunteer the question, they will give you the answer. Another very important point, never deduct expenses that were reimbursed by somebody else or perhaps a client. So, for example, there was a question I noticed in the chat room. Somebody was asking if I pay shipping charges and then the buyer reimburses that, how is that treated? The answer is it's a wash. The shipping payment is reported as income, but then there's an offsetting deduction for the amount that you paid for shipping. So that would not appear as income. That would not appear as a deduction. It's a wash. The two items net out. A big mistake that people make is reporting a deduction for expenses that somebody reimbursed them for. That is also a wash. If I go to a conference like I did in Arizona last week and I have a $500 airplane bill and the organization sponsor reimburses the $500, that is a wash. That is not income. That is not an expense. The two items, I am required to report both items, but the two net out, and there's no net tax liability for that. Last rule, be very conservative when taking aggressive deduction. The IRS always zeroes in on things like meals, entertainment, business conferences in Puerto Rico, that kind of thing. Look, here's Cliff's rule. This is not the law. This is just a simple rule of thumb. Picture in your mind the IRS examiner, the person that looks at your tax return. Form a mental picture of that individual. This is an individual locked away in the bowels of some huge government complex somewhere in Nebraska in a room with like 50,000 cubicles, of people all doing the same thing. What kind of life do you think this person has? What kind of soul do you think this person has? Answer, these people don't really have a whole lot of fun out of life. They really don't. It's a very boring technical job. So all of a sudden, this individual gets your tax return, and they see you deducting all kinds of fancy meals at four-star restaurants. You're going to Broadway shows, and you're saying you're taking a client. You're going to business conferences all over the country, and you're deducting all this. How do you think they feel when they look at this tax return? Answer, they hate you. They're looking at you, and they're saying, this 1% son of a gun, we are going after him. That's what they do. That is what they do. Seriously, I mean, you may think I'm exaggerating, and of course I'm having some fun with this, but it really is. There's a lot of reality in here. Generally speaking, the more fun an activity is, the less it's likely you are to be able to deduct it on your taxes. When taking deductions, you want to look to the IRS as if you're just as miserable as they are. That's what you want to look at. You want to look as if your life is just as dull and boring as theirs. And they'll probably have some sympathy with you at that point. Oh, yeah, this guy's just like me. We'll let him pass. That kind of thing. Exactly. The minute they start getting jealous of you, that's when you're going to start having problems with exaggerated deductions. Okay, let's move on to the next slide. Let's talk about employees and contractors. Okay, should you hire people? The answer is it's up to you. Basically, I always tell people employees always cost a lot more than you think they will. When you're looking to hire someone, you can't really look at their base salary. You've also got to look at overhead that's allocated to them, any benefits that you might offer them if they're W-2. A good rule of thumb, by the way, lawyers use this sometimes in hiring staff people. You should always assume that the total cost of hiring an employee is somewhere around 3 times what their base salary is. That's just a rule of thumb. So if you're hiring somebody at $10,000 a year, their total actual cost is probably going to be somewhere in the neighborhood of $25,000 to $30,000 when you factor in everything else. That's just a rule of thumb. Okay, anybody who works with you in your business, if they're not a partner, of course, is either an employee or an independent contractor. Very important distinction here. Employees get W-2s, and you must withhold payroll taxes. Now, here, look very carefully at what I did here. When you have an employee, you not only deduct, you have to withhold income taxes, you got to pay FICA, FUTA, and Medicare. When you're self-employed, you do not have to pay FUTA tax. But if you hire an employee, you must withhold and pay FUTA as well as Social Security and Medicare. And those taxes must be withheld and paid on a monthly, quarterly, or annual basis depending on volume. An independent contractor, you do not have to withhold any taxes from the amount that you pay them. At the end of the year, they get a 1099, and they are the ones responsible for withholding their taxes, income tax, FICA, and Medicare, not FUTA, because they're self-employed. Now, how do you determine whether somebody's an employee or an independent contractor? I could easily do a week-long seminar on this topic, easily. I mean, and believe me, the IRS has a whole booklet about 50, 60 pages long on the differences between employee and independent contractor. Here's the bottom line, though. If you can direct or control a person's activities, if you can tell somebody what to do and when to do it, that person is an employee. It doesn't matter what your contract with the person says. The IRS can blow through that and look at what you're actually doing. It doesn't matter how many hours the person works for you. There is such a thing as a part-time employee. It doesn't have to be 30 hours a week. Somebody can be an employee for 1 day a week or 5 hours a week. It doesn't really matter. The key is you have to be, if you direct and control that person's activity. So let's say, for example, I'm working with you, and I come up to you and I say, hey, Joe, listen, stop what you're doing right now. We just got a big order. I want to get it out today before the UPS store closes. Help me pack these boxes. Help me load up the truck. Once I get out of here, out to the UPS store, you can go back to do whatever it was you were doing before. If you have the right to do that to someone, that person is an employee. End of story. World without end. Amen. You know, I mean, I'm a lawyer. At any given time, I'm representing 50, 60 people. And don't get me wrong, people can certainly call me and say, hey, Cliff, I need this by Friday. You know, you can certainly give me a deadline. That's certainly appropriate. But between now and the deadline, I have the right to manage my time. I determine whether I work on your project or lawyer or Laura's or Kat's or Karen's. That's what makes me an independent contractor. I have control over my time. You cannot call me up and say, hey, Cliff, stop what you're doing. Stop this webinar right now. I really need you to do this for me to get this, look at this contract. After you've done that, you've gotten back to me, you can go back and continue the webinar. You cannot do that to me because I'm an independent contractor, and that's what makes me an independent contractor. Okay. Next, by the way, you've got to get this right. The IRS is auditing very heavily in this area. Right now, I'm working with a lot of guys who bought FedEx routes a number of years ago. They've traditionally been independent contractors. Now the IRS is trying to make them all employees, and it's a bloody, bloody mess. Let's talk about 1099s here. The basics. If somebody works for you, they are not an employee, and you pay them more than $600 a year, you are legally required to send them Form 1099 in January of the following year. This time of the year, I get literally 10, 15, 20 1099s every week. My tax return is probably one of the thickest that the IRS sees. The actual tax return is only 10 pages long, but there's 50 1099s attached to each one of these things. Because I work with clients, they pay me more than $600 a year. Okay? It must be a paper form. This is one of the few forms the IRS will not accept electronically. You've got to get them either from the IRS, from your local IRS office. In some parts of the country, you can get them in your post office. Do not wait until December to get them. Now is probably too late, to be honest with you, to get the paper forms. The reason why they're paper forms, by the way, is because there's carbon copies. The original form goes to the person that did the work for you, but then there's carbon copies you have to send to the IRS, to your state tax authority, and then you also keep one. That's why it's a paper form. Make sure you order them from the IRS. I always tell people around August, September, order your 1099. If you're sending out more than like 1 or 2 1099s a year, be sure to order them from the IRS. Less than that, your accountant probably will have the forms, and he or she can help you out. But if you're doing a lot of 1099s, order them from the IRS like August, September. Put September 1st as a date on your calendar for this year. Order 1099 forms from the IRS. If you're doing business with a corporation or another legal entity, you do not have to send them a 1099, but you still have to send 1099s to individuals and other unincorporated businesses such as single-member LLCs. Here's common sense here. This is not the law. This is common sense. If you pay somebody more than $600 and you don't think they will report it as income on their tax return, if they're either too dumb or maybe they don't speak English or they're not familiar with the tax laws in this country, if for any reason you just don't think they're going to report the income, send them a 1099. That way, you're off the hook. If they play games with the IRS and they get audited, it's their problem, and you will not get caught up in their problem. Whereas if somebody has to pay the IRS a 1099 and you don't send them a 1099 and they do foul up and they get caught, you're next in line to get audited. This is why you send people 1099. So a lot of people are probably thinking right now, well, holy jeez, it's February already. I did not send. I can think of somebody I really should have sent the 1099 to, and I didn't. What do I do? Well, you can always send it out late. There is a penalty. It's $50, I think, for each 1099, but you could send it out to them late. My suggestion, though, would be call them and let them know it's coming. Let them know it's coming because if they've already filed their tax return for the year and you send them a 1099 now, they have to amend their tax return to attach the 1099. That's going to cost them more in accounting fees. They are not going to be happy with you. So if you're going to send a 1099 late, let the person know. Call them, send them an email, whatever. Let them know that it's coming so that they don't file their return until they get it. Okay.
Good point, Cliff. Good point. I had somebody call me the other day and tell me about one was coming too. Can you go back to the last slide, Laura? We've got lots and lots of questions, and please know that Karen is collecting them very carefully. So don't think we're ignoring them. We're getting them. But somebody wanted you to repeat the part about corporations versus individuals and the 1099 thing. Can you just repeat that one more time? Thank you.
Okay. If you are working with a corporation or other, what they call a legal entity. So, for example, a multi-member LLC. That's an LLC with more than one member, somebody who files 1065. You do not have to send 1099s to those people. So if I do some work for eBay and I pay them, good luck with that. If I pay them more than $600 a year, I do not have to send them a 1099. But if I'm working with Kat Simpson or Laura Messerschmitt in her individual capacity, or any other unincorporated business that's a sole proprietor, a partnership, a single member LLC, anything that's an individual, only one person. And I would also include a husband-wife partnership in this, and that's probably overly conservative. But remember, husband-wife partnerships don't have to file 1065; they only have to file Schedule C. In a situation like that, you aren't legally required to send 1099s to those people, if you paid them more than $600 during the year. Now, again, this is where common sense comes in. Look, I'm a lawyer, folks. I get at least 50, 60 1099s a year. I report every income of my taxes. If I did work for you and you fail to send me a 1099, you can sleep at nights because believe me, given the work that I do, I am a small business legal and tax expert. If I ever got audited by the IRS and they found out that I was underreporting income, do you know what they would do to me in a situation like that? I am not going to take that risk in a million years because I value my reputation. I mean, it would be more than just a tax liability. I would be the laughingstock of the American small business community. Cliff Ennico, leading small business legal and tax expert, got nailed for underreporting income. Can you imagine the headline on the Wall Street Journal or the New York Times? I am not going to do it. I am not going to take that chance. So if you paid me more than $600 last year and you didn't send me a 1099, don't worry. I am going to report every penny of that income. You will not be caught up with in my situation. However, somebody who either doesn't play by the rules or somebody who just doesn't know that they have to file taxes. So, for example, a relative of mine is an elderly person. She has a caregiver who's here in the country from Soviet Georgia, a 24/7 caretaker. She's a lovely woman. She does beautiful work for my relative, but she doesn't speak English very well. Doesn't really know the requirements for doing business here. I always make sure that we send her a 1099 at the end of each year. Not because she's a bad person, but because I want to make sure that if they ever audit her or her caregiver agency, and they find out that they haven't been withholding the right amount from her, I want to make sure that I'm not going to get caught up in that audit. That is why we do it. So let's move on. I think we've covered that one to death. Believe me, I could do a whole program on 1099s, W-2s, and the whole employee versus independent contractor. There's a publishing company called, what's their name? They do a lot of NOLO, N-O-L-O press. They're out of California. They do a lot of self-help legal stuff. They have a 400-page book just on the topic of determining whether people are employees or independent contractors. What I've done in this program is really, really simplified. Okay, guys, let's move on.
Cliff, sorry, one thing I would add real quick is that if you pay the $600 per year or more through a credit card, you don't need to send the 1099. And the reason for that is because it gets reported on a separate form that the credit card processor sends. So again, that's if you pay through a credit card.
That is a very good point. Thank you, Laura, very much. More and more lawyers are taking credit cards these days, so that's actually I still don't. I'm still a dead trees guy in my practice.
One more question, Laura. Wouldn't that also account for PayPal too? Because it's
yes, correct. PayPal as well. Yep, and the reason for that actually is this Form 1099K, which is what we are going to talk about next. And the 1099-K is a form that PayPal will send you. If you sell on Amazon, you'll get one from them as well. And what this form does is it reports your revenue, both to the IRS and to you. It's very similar to the 1099 MISC that Cliff was talking about. And this is why actually you don't need to send a 1099 MISC to someone that you've paid via credit card or via PayPal, is because they'll get it through this form, which is again the 1099-K. So for your guys' purposes, just remember this is a form you receive. It's not something that you ever need to send out. It's only payment processors that need to send this out. And it'll actually show your total revenue as well as your monthly revenue. And that, I believe, is for the purposes of the estimated taxes, so they can see what's going on in your business on a monthly basis. The IRS can. They'll send it basically the last week of January, so you should have already received one for this year if you're going to get one. And again, you'll get one if you have more than 20,000 in sales and 200 or more transactions. So you do have to reach both of those in order to get one of these forms. And it will include everything that's under, if you have multiple PayPal accounts, if it's all under the same tax ID, you'll receive one form that covers all of those. So that's an important clarification as well. And then when Amazon sends them, they actually send it just for Amazon purchase, just through Amazon sales. So they're not, PayPal and Amazon aren't talking to each other. They're not adding those sales together. They're completely independent. You would have to meet these requirements as well on Amazon in order to get one. Don't forget that shipping revenue, sales tax collected, fraudulent payments, and any returns are all included on the 1099-K. And what I mean by that is that PayPal isn't deducting these things from your forms. What they're doing is they're just taking the total revenue that you received. So this can be a little confusing for some folks, but it's important to note, like for example with shipping revenue, they're assuming that the customer paid you for the shipping, so therefore that's revenue. And then later you'll go and you'll deduct the expense that you incurred to ship that. So as Cliff mentioned, that may net out to zero, or you may have made a little bit of a profit. But either way, you will be reporting all of your revenue, including shipping, including tax collected, all that stuff on your tax form based on this 1099-K number, and then subtracting off all of those expenses and deductions. So, and the note here is it doesn't include any deductions at all. So that's where your job is to tell the IRS what those deductions are, because they're not going to know. They're only going to know your revenues. So what do you do if you get one of these forms? First, you'll want to reconcile it, which is basically make sure that it's generally right. Usually if there's an error, it's usually we find on your side, not on PayPal's, because they're very diligent. They've got an entire department that works on this. But you do definitely want to make sure that your books generally match with what PayPal's form says. It's not going to be 100% because PayPal does literally include everything, and so you might be slightly under in your numbers or slightly above. That's okay. You don't have to worry about being exactly right, but you definitely want to be in the ballpark. Then you'll want to include all of your expenses. So every expense you have for your business, you should definitely take that off on your taxes, because that will reduce the amount of taxes that you have to pay. And actually, in our last webinar, in the beginning session that we did, we actually talked a lot about expenses. And so you can feel free to go to the PageMage website and you can get the download of that presentation if you missed it. A little bit about deductions. Basically you want to take all the deductions that you're eligible for. Cliff talked about those a little bit, and in the last webinar that we did on pagemage.com is the recording of that. You can definitely learn more about some of the other deductions you might be eligible for. So I'd highly recommend that you check that out if you haven't seen it. Once you've actually done all of this and you've got your taxes done, you definitely want to do one more thing, which is double check your tax return. So you'll want to look at your Schedule C Part 1, and whatever number you've got on there, you absolutely want to make sure that the number that's on that form is higher than the total of any 1099-Ks that you received. This is really important because the IRS has specifically stated that this is going to be an audit risk. Cliff mentioned this before as well, and I'm repeating it because it's very important. If you are going to get audited, this would be one of the main reasons why an eBay seller might get audited. Yeah.
And it would also be one of the dumbest reasons, too, to get audited. I mean, really, if you get audited because of this, you should be ashamed of yourself for not catching that.
Yeah. So definitely double check it. Again, that's looking at your Schedule C Part 1. The income that you've reported needs to be higher than what's on your 1099s and the sum total of any that you've received. And now Kat, are there any questions about 1099 or 1099K that we should answer now?
Karen, do you have them divided like that? They're coming in hot and heavy.
I've got so many questions. I'm not sure that there are. One of the things that I'm talking about with somebody right now is somebody has multiple PayPal accounts under one Social Security number. So they got 3 1099s. So does PayPal, would each account have to be 20,200 transactions or combined on that Social Security card?
It's combined under that Social Security number. Is how PayPal
Okay.
would do.
So that's why you got the 310. She got the 3 1099Ks because she has multiple accounts, but it's all under one Social Security number.
Yeah. So they'll add them all up, and if you hit over 20,000, they'll send it to you.
Okay. Let's see. I'll start with some of the. A lot of them were about the miscellaneous, but I'll hit the ones right now that are 1099K. Yeah, you would get three, one for each PayPal account, but it's a combined value of $20,000 or over 200, right?
Yeah, you have to hit both. Yep, it's an and.
Okay. If I receive a 1099K from Amazon and one from PayPal, can I combine them on one Schedule C, or should I have a separate Schedule C for each?
So you can combine them. Again, I would repeat just to make sure that the sum total of all your 1099Ks is fully reported on that Part 1.
Yeah, the real question there, you can do more than one Schedule C, but generally speaking, they should be different businesses. So, for example, I have about 4 Schedule Cs attached to my 1040 because there are certain things that I can deduct as a professional speaker that I cannot deduct very well as a lawyer, and that's why I do that. I keep my businesses separate. They're all under one tax ID number, but I keep them separate and I file Schedule Cs. You certainly can voluntarily file a separate Schedule C for your Amazon sales as opposed to your eBay sales, but you are not required to do so. You could certainly combine those into one Schedule C.
And most folks that I see do combine them because the businesses are so similar. Selling on
Yeah,
eBay
exactly.
similar.
The general rule is if you're doing things that are very different, like let's say you have a law practice, but you also sell on eBay. Those are 2 very different charts of accounts. Those 2 accounting statements are going to look very different, and that, to me, argues for having them separate. In fact, I would actually have those as separate businesses with separate tax ID numbers and all of that. We could do a whole program, I think, Laura, on dealing with multiple business entities, because most eBay sellers don't just do that. They do a gazillion other things.
Multiple web identity disorder, that's what Kat and I call it.
There we go, exactly. And most of them are legal, you know.
Okay, here's one more question. I'm doing my taxes online. Where do I include the info from the 1099K? Am I considered self-employed?
Yeah, so it would depend. But if you're a Schedule C business that's filling out a Schedule C, meaning you're a sole proprietor or an LLC, it would still be on Part 1 of that Schedule C is where you put all of your income.
Right. Just make sure that everything on the gross income, everything is included in the gross income line. Everything that you make, your wages from your day job, your Schedule C income, everything has to be reported on that total line.
And one more. Since PayPal sends the 1090K to the IRS, do we have to send a copy of the 1099K in with our return?
Okay, now, who said no? I would have said yes to that.
Yeah, I was going to say yes.
Yeah. I don't know who said no, but I don't think that's correct. I think you do. You have to attach. When you get a 1099, you are supposed to attach every single one to your tax return. There is a procedure for people who get lots of them where you can summarize them. You can attach a summary sheet, but because it's so much more difficult, it's more of a bother to prepare the summary sheet than it is to just attach the bloody things. I think most people don't do the summary sheet thing.
Well, I know I did TurboTax online this year, and they didn't. Usually, if you have a W-2, they'll give you all the boxes. But with but with the 1099K, you just had to check off whether you had one, and then you added the money in when you did your Schedule C.
Oh, okay.
So they didn't request on my TurboTax for me to send, fill out all the data from the sheet.
When in doubt, do it. Let's put it this way.
Exactly.
They have these extra thick staplers now. You can buy them at Office Depot for like $10.
Who does paper
filing?
filing?
Well,
You You should
That's where
see
the
my
no
tax
came
return.
from. I want a picture of that one, but that's where the no came from. I'm thinking electronic. I don't want people to think if you're filing electronically, you don't have to send anything in at all. So if you're sending a paper return, then yes, send everything, your 1099s, all that. But if you're filing electronically, you don't send anything in, right?
Yep,
That's
correct.
That's correct,
Okay.
exactly right. But you guys still got to make sure that gross income line still exceeds the totals of all the 1099s that you receive.
Exactly.
They'll still be
Okay,
looking.
one more question. What if PayPal 1099K has sales from consignment transactions?
That's actually correct. They should include that because that's considered income for you. And then you need to report that on part 1 again. And then what you'll do is you'll take the amount that you paid that person that consigned with you, you'll take that off as an expense. And that is the proper way to do it for consignment. I know not everyone has been following that accounting method, but it is the right one. And that's why the IRS does it that way.
Right. And generally speaking, we're going to talk about consignment sales later on in the program because I know that that's again, we could do a whole program on drop shipping and consignment sales. But generally speaking, if you are taking consignments from other people and you pay them more than $600 in the course of a year, you are technically required to send them a 1099. A 1099 MISC is what you would normally send them. And whether they're family members or friends means absolutely nothing.
Thank you.
Okay, guys, why don't we move on because it's very easy to get sort of caught in the weeds here, and we're actually almost at 3 o'clock here.
Great.
Okay.
So I can start off on the history of sales tax, and then I'll pass it off to Cliff for the nexus part.
Okay.
But so the history of sales tax actually starts in 1992, where there was a Supreme Court case that was Quill Corp versus North Dakota. And what had happened, sorry about that. What had happened was that the state of North Dakota was saying that Quill Corp should be collecting sales tax for sales that they made within the state. This was for a software product. And the Supreme Court said, no, North Dakota does not have the right to require the Quill Corp to collect this sales tax. And so this is a law that basically has maintained since 1992. It hasn't changed. So even though the internet was invented after this, it's still this particular Supreme Court thing actually still applies, which basically means you are required to collect sales tax if your customer is located in the same state that you have a physical location. And that's what this means, right? So if you don't have a physical location in North Dakota, then you do not have to collect sales tax from people in North Dakota. And so that's why the first step in figuring out the whole sales tax thing is figuring out where do you have what's called nexus, which means where do you have a physical location. Then once you've figured out which states you have a physical location in, those are the states in which you're going to have to collect sales tax from customers in those states. And that's across your business, so it's not just your eBay sales. It would be across any business that you've got. So what you'll need to do is you'll need to go investigate and register, actually register to collect the tax. Then you'll need to collect it, and we'll talk about how to do that. And then finally, you actually do need to send it in on a pretty regular basis. All the states have different deadlines, but we'll show you where to go ahead and look that up so you can figure out the right times to send that in. So Cliff, you want to talk about nexus?
Yeah, let's talk about that. The word nexus, by the way, is just a word that means a connection or link, is really all it means. But in the sales tax world, it has a very specific legal meaning. Basically, first of all, let's begin with the basics. If your state has a sales tax, not all do, you must collect and pay sales tax whenever you sell to people in your state. So if I'm in Connecticut with an eBay business and I sell to somebody in Connecticut, I am required to collect and pay, 6.35%, of the purchase price to the state of Connecticut in sales tax. There is no exception for internet sales. That's a big, there's a lot of misinformation in this area, and one of them is, if it's on the interstate, if it's on the internet, there's no tax. Not true. Whenever you have an in-state sale, seller and buyer are in the same state, there is always sales tax. The only question really at that point is the item taxable, or does it fall within an exemption? When you first start selling on eBay or Amazon, you must register with your state tax authority and get a sales tax ID number. This is often called a resale number. Now, under current law, if you do an interstate sale, if you're in Connecticut and you sell to somebody in Wyoming, right now, under current law, you do not have to collect sales tax when you sell there. But if you have a nexus in another state, with a physical presence in another state, and you sell to somebody in that state where you have a physical presence, you must collect and pay that state's sales tax whenever you sell to people in that state. So here are some common examples. If you have an office or P.O. box in another state for your business, you're in Connecticut, but you have a branch office in New York, you have nexus in New York. If you are partners with someone in that state, if you're in Connecticut, but you're selling in partnership with your sister-in-law who lives in Kentucky, you have nexus in Kentucky. It doesn't matter where stuff ships from. If sometimes it goes from Kentucky, sometimes it goes from Connecticut, no matter. The fact that your business is in both states means that you have nexus in both states. If your merchandise is stored in a warehouse in that state, hello, Amazon FBA sellers. If you're in Connecticut and you're selling on Amazon FBA and your merchandise is stored in one of their Pennsylvania warehouses, you have nexus in Pennsylvania. And believe it or not, you will hear from the great Commonwealth of Pennsylvania Tax Authority at some point, who will ask you to register for sales tax if you don't do it when you first start selling on Amazon. Last but not least, if you take consignments or drop ship items for someone in another state, you are deemed to have nexus in that state only for the items that are sold under that contract. Little tricky. So let's say, for example, if I'm in Connecticut and I take a consignment of stuff from somebody in New York and I sell some of that stuff to New York buyers, I would have nexus in New York for the purpose of those sales. And the same basic rule would apply to drop shipping. We'll talk more about these a little bit later on because the sales tax rules get a little complicated when you start talking about consignments and drop shipping. Next slide, please. Okay. Laura, we'll do this one together, I think. This is probably the hottest issue, especially for people who sell on Amazon. First of all, eBay sellers don't have as much to worry about here. When you buy something on eBay, eBay does not get involved in the transaction. You are not buying from eBay, you're buying from me or from Laura or from Kat. eBay does not get involved. eBay does not have warehouses where stuff gets stored. So it's a little bit less of an issue for eBay sellers. If I'm in Connecticut and I'm selling to you in California, we do not worry about sales tax. When you're selling on Amazon, especially using the FBA program, you also have to be concerned about where your stuff is located. Right now, if you're selling using these states, as I understand it, Laura, these are the states where Amazon has warehouses. Is that right?
That's correct. Yep.
Okay. So when you are selling on using Amazon FBA program and your stuff is located in a warehouse in one of these states, you do have nexus in that state for all purposes, too. And by the way, that doesn't just apply to your Amazon sales. That applies to everything. So if you're selling on Amazon and you've got stuff in a warehouse in Pennsylvania, you have Pennsylvania nexus not just for your Amazon sales of that inventory, but also for your eBay sales, your Etsy sales, and everything else that you may be doing. Okay. This is the general nexus rules. Now, what's complicating things right now is the fact that on top of the traditional nexus rules, Amazon is cutting deals with various states. Laura, do you want to speak to that?
Yeah, and so a lot of times these deals will say that Amazon does not have to collect sales tax in a place where they have a location for a certain amount of time. And so the states are making these deals because they want Amazon to come into their state and build a warehouse. So the examples would be South Carolina and Tennessee, where Amazon does not have to collect sales tax for a certain period of time, but you are independent of Amazon. And so if your FBA sales are coming out of those warehouses and you're storing inventory there, then you do have nexus in South Carolina and Tennessee. So you want to watch that because people will see on the TV, on the newspaper, how Amazon doesn't have to collect sales tax in Tennessee, but that doesn't necessarily apply to you. What matters to you is, do I or do I not have a physical location in that state? And if you do, then you have nexus, and it's important to remember that.
Yeah. Yeah. Under general nexus rules, the thing you have to remember is wherever your inventory goes, so go you. It's like, remember Buckaroo Banzai from the 1980s? Wherever you go in life, there you are. That applies to your inventory as well. The fact that your inventory is in an Amazon warehouse in Indiana, that is treated as an extension of your business. You have a tiny little few square feet of space in the great state of Indiana. It's treated the exact same way as if you had an office or a P.O. box there. Okay, let's move on a little bit. We could easily spend a whole program on this topic, but let's move on. We're going to try to get through all our slides on time. Laura, why don't you talk a little bit about how Outright helps you deal with sales tax?
Yep. Well, so first before I get into Outright, I'll talk about investigating and registering for sales tax.
Okay.
And so once you've decided where you have nexus, the next thing to do is figure out what are the requirements in each state. So requirements, what rates, what items are exempt can be important, particularly if you're selling food, and in some cases clothing can sometimes be exempt. So it's important to look that up. And you also do need to register for each of these states. And there are different forms, most of them online, luckily, but there are different forms for each state that you do have to fill out. So if you're an Amazon FBA seller, you may have a number of different states in which you have to do this. And so if you go to the Outright blog, and I've got the URL here, we basically have gone through all of the 50 states plus Washington, D.C., and provided a little bit of information and links to each of the states. So hopefully that'll help out. Another thing I'll note is on the blog, we've also put all of the FBA centers, all of their addresses. And so you'll need that information when you're registering if you are an FBA seller. So that's also on the blog. And we're constantly updating it as we get more information. So you can always put, if you see something that needs to be changed on that, definitely put a note or a comment on that blog post so we can make that change. So again, you definitely do have to go and figure out what are the requirements for that state because they all differ. Everything from, how do you calculate the tax, what percent is it, when do you need to file it, it's all different based on the states. Once you've done that, then the next thing to do is to collect the sales tax. And I actually consider this to be the easier part, particularly if you're an eBay seller or if you're an eBay and Amazon seller. Because in both cases, Amazon and eBay will let you go in and will let you set this up to be automatic. So it does take a bit of time the first time you go do it. But once you do it, you can let it go. It'll just happen for you sort of automatically. If you collect through Amazon, they do charge a fee, and that fee is 2.9% of the sales tax collected. So it is a small fee, but I just wanted to mention it so that you did know that to expect that. And eBay will collect it for free, and in both cases, for both Amazon and eBay, you just go to their help sites, you type in sales tax collection, and they've got the information about how to set this up. For some states, which are origin-based, meaning that the tax is calculated based on where I, the seller, am located, it's much easier because you can just have a flat rate for the whole state. In other states, they're what's called destination-based, which means that where the customer is located is what's important for the tax rate. And so in those states, you will actually have to go in and do it by zip code, sometimes by city, to put in those rates. So it can get a bit complicated. As I mentioned, though, it's only a one-time thing. Once you do it, you're good. And then another thing I've seen some people doing, if they're an eBay seller, they're not selling on Amazon, and maybe they're located in the state of North Dakota, they may not have a ton of customers coming to them in the state of North Dakota. So what they'll do is they just won't even set this up at all, and they'll just go calculate how much tax they should have collected, and they'll send that in out of their own pocket. Obviously this only works if you have Nexus in a very few number of states, usually just one or two, and it only works if you're in a state in which you're not getting a ton of customers from that state. Because it's not that hard to collect it and to figure this out, so it's not the end of the world to do this. And we found that it does not deter buyers. So a buyer won't search out somebody who's not collecting sales tax versus somebody who is in their state. So we haven't seen people drop in the number of sales that they're seeing online by setting up sales tax. Because it's almost an afterthought. People are used to paying sales tax. It shows up at the very end when they're checking out in their cart. So it's usually not a decision-making factor, somebody trying to decide which seller they're going to go with. It's not usually based on sales tax.
That's a great point, Laura. Like you said, they're almost ready to check out by the time they see it, so it usually doesn't bother them. Folks, I just wanted to give you a heads up. We are at the end of our scheduled time, so we know that how busy you guys are. So if any of the attendees need to leave, please understand that we are going to continue for about 15 more minutes, answer as many questions as we can, and we will be compiling a Q&A document from all of the questions that came in during the webinar, putting the answers that we got during the webinar, asking Cliff and Laura to comment on the ones we don't get to, and we will be putting that up on the PageMage website. So if you have to leave now, we'll miss you, and we understand, but you will be able to catch up later. You'll be able to watch the webinar on the YouTube channel, and you will get a question answer PDF that we'll put together. Cliff and Laura have generously offered to stay for some extra minutes and try to cover more questions, but we just wanted to give everybody a heads up in case they had to go. Thanks, guys.
Thanks. So the last part of the sales tax is just collecting that, actually getting that sales tax, tracking it, and then remitting it to the state that's owed. If you're an outright user, one way to do that is to go to the reports, sales by state, and you can actually click on to see it in chart view, and then you'll see how many sales you had in each state, and then you can apply the tax rate to come up with the amount that you owe. That's one way to do it. Another way is we do have a sales tax report. This one's a little bit limited because it will only show you the total. It won't break it out by state. So this works really well if you have one state that you're collecting in. If you're having more than that, I'd recommend using that sales by state report is the best way. Remember, you can also get these from Amazon and eBay. You can download the information and then calculate it that way. Most states require quarterly filing, but it really does vary, so you'll need to check in with your state, and when you register, you'll find out when they want you to send it in, because some are monthly and some are annual. So it all varies by state. Cliff, do you want to talk about inventory real quick?
Okay, let's talk about this here a little bit. Okay, when you buy inventory, now we're talking about you're buying stuff that you're going to sell on eBay or Amazon or whatever. When you get your resale number and you're buying stuff that you intend to sell at resale, you're supposed to give the seller a copy of what's called a resale certificate that has your resale number on it. This is a free document. It lives on your state tax authority's website. If you go to your state tax authority's website and click on Forms and Publications, I guarantee you will find the form of resale certificate. What you do is you print it out, you fill it out with the name of your business and your resale number, and you make a gazillion copies of it. And then whenever you go and buy inventory, you fill in the particulars for that particular purchase and you give it to the vendor. The purpose of this is that if they ever get audited because they didn't charge sales tax on your purchase, they can show the state tax authority the resale certificate that you gave them, and if it's wrong, if it's fraudulent, they can come after you. If you pay sales tax when you buy something, a lot of vendors will not take resale certificates because they're not legally or for some other reason authorized to sell at wholesale. They can only sell at retail. So if you do end up paying sales tax, what you do is you add it to your cost of goods sold and you deduct it when you sell the item on eBay. Okay, what is this thing called a use tax, by the way? This confuses a lot of people. Every state that has a sales tax also has a use tax as well. It's an inverse sales tax. I like to call it the sales tax's evil twin. It's almost always the same rate as the sales tax, and you report use tax on the same return that you do for sales tax. Here's the rule on use tax. If you buy something for your own consumption, not inventory, not for resale, if you buy something for your own consumption and you do not pay a sales tax at the point of purchase, you must pay a use tax to your state. So if I'm in Connecticut and I buy a laptop computer from Laura in California, no sales tax because it's an interstate transaction, but I'm going to be using this laptop in my business. I'm not buying it for resale on eBay. I'm buying it for my own personal use. I am required to pay 6.35% of the purchase price to the state of Connecticut as a use tax. They are not taxing interstate commerce here. What they're doing is they're taxing the privilege of my being able to use this laptop in the state of Connecticut without having to pay sales tax on it. Don't you love lawyers and how we split words in 16 different ways? What makes the use tax a little complicated is that if you have nexus in another state, and you buy something from a resident of that state for your own consumption, you may, and you don't pay sales tax on it, you may have to pay use tax to that state. That's a question for your accountant. That may be getting just a little too complicated for some people, but that's another consequence of having nexus in another state that you need to be aware of. The thing about the use tax, the advice that I normally give clients on use tax is whenever you file your sales tax return and they ask you, did you incur any use tax during the quarter, always put a little something down there. Don't leave that line blank. Don't put it 0. Because if they ever audit you for sales tax, the first question they're going to ask you is, hey, you're an eBay seller, you sell on eBay, do you ever buy anything on eBay for your own purpose, for your own use? Of course the answer is yes. There's no way that you can say no to a question like that. By putting a little something on the use tax line, you can then say to the auditor, well, wait a minute, yeah, that's what that $10 is all about. What's the problem here? At least it gives you an argument. Whereas if you put 0 on there and they can prove that you bought something, for your personal use online, they got you now. You just lied on a tax return. So I always advise clients, put a little something in there. Look at it as bakshish. Look at it as a payment to the local mafia. Look at it that way. Is the way. At least it gives you a defense. So if you're ever audited for sales or use tax, you can always say that you made a good faith effort to comply. Next slide, please. Okay, let's talk about drop shipping and consignment sales. We've already talked about this a little bit in the program, but what the thing you have to remember is that if you are a drop shipper for somebody else, okay, you have nexus wherever your drop ship, the company that you're working with or the consignor is located. So let's just look at some examples. If you are in New York and you drop ship for a company that in Ohio that has physical locations in Ohio and Iowa, I just did that because they rhyme, you always pay New York sales tax when a New York person buys. This has nothing to do with anything. Your business is in New York. You always have nexus where your business is located. Okay, if you sell dropship merchandise to an Ohio person, you have to pay Ohio sales tax when an Ohio person buys it. It's technically speaking, when you drop ship for another company, they own the goods until they sell online. All you have is the right to sell the merchandise on their behalf. So the law looks at this as an Ohio seller selling to an Ohio buyer, ding, in-state sales, Ohio sales tax applies. And similarly, you pay Iowa sales tax when an Iowa person buys. So whenever you do a drop ship or a consignment contract, one of the things that has to be in there is there has to be some kind of a representation where the drop shipper or the consignor tells you where they're located, where they have physical locations, because there's no way you can know that. Make sure that you warn residents of those states that you will be adding this amount to their winning bid. eBay does allow you to do that, by the way. You can say, hey, residents of Connecticut, Iowa, and New York, Iowa, and Ohio, sales tax will be added to your winning bid or buy it now price. It definitely enables you to do that. Make sure you do that. I actually have forms of consignment agreement and drop shipping agreement at the end of my eBay seller's tax and legal answer book, which has worked pretty well for a lot of folks, especially in the eBay community. Next slide, please. Okay, I apologize, but I do have to put a little bit of a self-serving slide in here. If you don't already own my book, it's probably the best $19.95 you will ever spend, really, because I really took a lot of time. The book is over 300 pages long. It contains detailed chapters with everything you need to know about all this stuff if you're selling on eBay. I've also included some very useful forms. You probably will have to type them onto your computer. Unfortunately, we didn't include a CD or a DVD, but hey, you've got time. You can do it. What do you want for $19.95? And the cost of the book will almost always be fully deductible. I would say. I always have to say maybe because I'm a lawyer. I don't like to do, but I have a whole chapter, for example, on sales tax. I have a whole chapter on drop shipping and consignments. Really a very worthwhile investment, and maybe not the last word on the topic, but certainly a great place to begin.
And then very quick pitch touch on Outright, and then we'll take questions. So for
Sure.
those of you who want to use Outright, basically what we do is we pull in your eBay, Amazon, PayPal, all sorts of banks and credit cards. We pull all that data in automatically and categorize it for you so that you know what your totals are for tax purposes. If you want to get Outright, we do have a free version and a paid version. And you can get the free version if you go to the App Center on eBay, which is under My eBay, and then you click on Applications. And we are under the free apps. We're the third most popular on there. And Kat, should we go ahead and take questions now?
Yes, we'll get started. Karen, here you go.
I'm here. I was just saying, you got all year. My notepad is like really long. I'm going to start with the most recent and work my way back just because we're talking about this stuff. For drop shipping, did Cliff mean if you, the seller, use another company to drop ship products purchased through eBay that you have to collect sales tax from that customer if they live in the state that the drop shipping company ships the products from?
Okay, well, I think I got that, but let me say it my way.
Okay.
If you're in Connecticut and you're drop shipping for a company in Ohio, the Ohio company owns the merchandise, they warehouse the merchandise, they just say, hey, we'll let you sell up to 50 of our units on eBay, and you make a sale, you tell the company, hey, ship to Cliff Ennico and such an address. If the drop shipping company and the buyer are in the same state, there will be sales tax on that transaction.
Okay.
But hopefully that is clear. Again,
yep,
if the seller, when you're drop shipping, the company that owns the merchandise that has it in their warehouse is considered to be the seller. So if the buyer and the seller are in the same state, it's an in-state transaction, and that will always trigger sales tax. I mean, if there is a sales tax, of course, in that state.
Okay. The next question is, I have someone who, she's downsizing possessions owned by her for years. Are those items taxable?
I'm sorry, one more time.
Okay. This person is downsizing her possessions that she's owned for a long time. Are they taxable?
Okay, the short answer to that is yes, they are. I mean, let's face it, the last time that you bought a used car, didn't you have to pay sales tax at the dealership? There is sales tax for used items as well. The real question is, whenever you're dealing with sales tax, there's two questions you have to ask. Number one, do I have nexus where the buyer is located? That's number one. We've covered that pretty much to death on this program. But the second question is, do I have to charge sales tax at all, or is the item exempt? So, for example, here in Connecticut, purchases of clothing of up to $50 are exempt from tax. So if I sell a $20 shirt to somebody on eBay and they live in Connecticut, which is the same state where I live, yes, I have nexus in Connecticut, but because the shirt is less than $50, I do not have to charge sales tax because it falls within an exemption. I think that's a very important point. Just because you have nexus somewhere doesn't mean you charge sales tax on every transaction. What it means is you're going to have to find out what those states' exemptions are and what things are exempt from tax. That's what makes this all so complicated, because every state, every sales tax jurisdiction has different exemptions, different limits on things. These things tend to be political footballs, and they change often from year to year, depending on politics, budgeting, all the wonderful things that we see in the media every day. So just keep that in mind when you're selling. But yes, used items are subject to sales tax, if there is tax on them.
Okay, now just to further complicate things, what about income tax? Is it considered income?
Okay, the answer is, if you're selling stuff from your attic, the answer is that yes, you do have income to the extent that you sell them for more than you paid for them. Now, the big question is, how the heck do I know what I paid for something? I've had it for 30 years. It was given to me as a wedding present 30 years ago. How do I determine what my cost of goods sold is? That's really the question here. Now, the IRS says you can estimate, based on reasonable, if you think it was about $10 or something, and that was what similar items were selling for back in the 1970s, and as long as it's reasonable, as long as you make a reasonable effort to calculate to determine what the cost of an item was back then, the IRS will buy that. When in doubt, when you simply cannot do it, what I would do is I would simply say zero. Put zero down as the cost for it. Now, yes, if you do that, you are paying the IRS a little too much in taxes, more than they're due. But you know what? They will not complain about that for some reason. You don't have to worry about being audited for overpaying your taxes. That I think is a fair bet.
Okay. the next thing is, what if I'm so this person is the seller. They live in New Jersey. They buy from a company in New York. Do they also, on their other sales, have to pay New York sales tax? Or just for that drop shipped item?
Okay, they're in New Jersey and they're drop shipping for a New York company.
Right.
But they're selling stuff online. I believe they only have Nexus in New York for that merchandise. It would be treated the same as consignment.
Okay.
The line between consignment sales and drop shipping is a very thin one. Usually in a drop shipping situation, you're working for a company, a business, whereas in consignment sales, you're selling stuff for an individual. I mean, that's the technical distinction.
Karen,
Mm-hmm.
I have a suggestion. We are at 20 after, and I'm thinking if we can stretch another 10 minutes, if Laura and Cliff can stay, that'd be great, but I don't want to push them past that. So why don't you try to pick a question from different topics for the next 10 minutes?
And then
because there's a lot of questions that are really the same thing worded in different ways, and don't worry if we skip your question. We're not really skipping your question. We are going to circle back around to it and get it in that Q&A document. But for the next 10 minutes, let's just see what we can answer some more general questions perhaps in different areas.
Okay. Well, regarding use tax, here's another category. If I buy shipping supplies out of state, don't pay taxes on them, should I include that in my return under use tax?
Okay, no. Shipping supplies, no. Those would be added, let me see. You would add those to your cost of goods sold, and you would basically deduct them when the item sells. The shipping supplies that you do not use at year end, I believe you would treat those as, you wouldn't treat them as inventory. You would treat them as supplies, I believe, for accounting purposes. When you do your year end balance sheet, is how you would treat those. Again, you're buying. What they're really looking for are things where you are the ultimate consumer. Is really what they're looking for. Things that you are buying as a consumer, not for resale. So the answer for shipping supplies, I believe, is no.
So, for example, when you're talking about, I live in Massachusetts, the closest shopping centers to me are New Hampshire. New Hampshire has no sales tax, but I should claim use tax on everything I buy in New Hampshire on my Massachusetts tax.
You should look, I believe that there is no use tax in New Hampshire either.
Right.
Generally speaking, if there's no sales tax and use tax go hand in hand. If there's no sales tax in a state, there usually is not a use tax either. But check with somebody local. I am not an expert on New Hampshire law, so I don't know.
Right, but I live in Massachusetts, so Massachusetts is looking for use tax because I bought it out of state, didn't pay tax, but I'm using it.
And a lot of states do that now. A lot of states are auditing use tax very aggressively. Use tax is nothing new. It's been on the books since the 1950s. But what's happening now is because states are so desperate for revenue now, they're starting to audit that a lot more aggressively because they know people make mistakes.
Okay. This is about inventory, and I know inventory is a big thing, especially for eBay sellers. And I'm going to put two questions together. Number one, what is considered your inventory? Is it the stuff you have listed? Is it all the stuff you have bought?
Okay,
so let's start there.
I'll give a short answer to that. It's all the stuff you have purchased that you intend to resell at the time you bought it.
Okay. Next part of that is, when I claim for inventory purposes, is it the price I paid or is it the price I'm planning on selling it for? Okay. For inventory purposes.
For inventory purposes, there are a number of ways that you can value inventory for accounting purposes. We're not going to get into that, but basically what you need to determine is your cost of goods sold. It's whatever you paid for the item plus shipping plus sales tax that you paid at the point of purchase. Basically, any amounts that you paid at the time that you bought the merchandise is considered cost of goods sold. You do not deduct it at the time you acquired the merchandise. You deduct it when the item sells on eBay. So, for example, if you bought an item for $1 plus 6% sales tax plus another 4 cents in shipping, I'm just keeping these numbers very simple, so $1.10 total, and the buyer did not reimburse you for any of the shipping or the sales tax, you just decided to eat it, your cost of goods sold would be $1.10. So if you sold that item for $2.10 on eBay, your profit your taxable income would be $1. 210 minus 110.
Okay, but what if you're using, just to further, because there's more about this one, the cash method for your inventory for your tax purposes? Is it the cost of the item that you paid for it, or what you're listing it as for sale?
Okay. Generally speaking, for book accounting, it's the lower. You can deduct the lower of what you paid for it, or the market value. I do not like using market value because it's too subjective and could open you up to serious questions if you're ever audited. I would think the vast majority of eBay sellers would use the cost of what they purchased it for. I'm hoping that's answering the question.
Yeah, I think so.
A more difficult question, I think, is what happens if you buy something and let's say that you pass the shipping cost on to the buyer. Your cost of goods sold would still be what you paid for the item plus the shipping, but because the buyer is reimbursing you for the shipping, you cannot claim a deduction for the shipping piece. The shipping is a pass-through. It's the two things get netted out. What the buyer is, remember I said before, you cannot take a deduction for something where you're being reimbursed for that. So if you are getting reimbursed for shipping, that's a wash. You report it as income, but then you report an offsetting deduction. The two items net each other out. And the cost of goods sold in that case would simply be the buy it now price less what you actually pay for the merchandise.
Okay. Here's a 1099 question. Just a quick review of what is a 1099 miss and what is a 1099K. I know those are very confusing. Okay, well,
there are about a dozen different forms of 1099. There are a lot of other ones too. There's form, GOV. There's DIV. There are different forms for different payments. The 1099K is a form that only applies to online sales. It only applies to people that use an online payment system to sell and buy stuff online. Not just eBay. Every online payment provider is required to send 1099Ks to people who meet the $20,000 and 200 transaction requirements. The 1099 MISC is a form that you use when none of the others apply. It's the catch-all form that you use.
Okay. Laura, were you saying something?
Yeah, I was trying to say that it also is credit card. Credit card providers also send them, so it's not just online sales. So for somebody who has a retail store location, they could get a 1099K from their credit card, whoever's doing the credit card processing for them in that store.
Okay. Are sales tax paid deductible on your federal return?
Are sales taxes paid? The IRS allows you to deduct the greater of sales taxes paid or income taxes paid to a particular state. I mean, I think the short answer to this question is yes. If it's part of your cost of goods sold, then you deduct it. It reduces your taxable income. So the answer is yes. If you paid sales taxes to purchase inventory and you were not reimbursed for that by the buyer, that I believe is deductible.
Okay, I'm kind of scrolling.
Keep in mind, folks, this is not legal tax advice that you can rely on. I'm just giving you general information. Seriously, you need to talk to an accountant and make sure that you get this stuff right.
And that was one of the questions. Is there any advice on how to find a good accountant, especially with online sales? I know lots of people.
Great ending question. Great ending question. I'm glad you said that, Cliff, because we were talking about the Q&A document too. We want to answer your questions, but neither Cliff nor Laura can give you individual tax or legal advice, as we said earlier. So we're probably going to look at those questions and word those into something a little more general. This is the situation. What are the legal ramifications or the accounting ramifications of them? So with that said, this is a perfect question, Cliff and Laura. How do I find a good accountant who knows what they're doing with online business?
So I can take that one. So I'd say, obviously Cliff is a great resource. Also, we've got about 6 other accountants that our users have used that we know online sales or online sellers. So we will go ahead and send those in that Q&A document, so you can have a list of those folks.
Okay, and if I'm looking for just an accountant and I go to Google and I say accountant in Mount Dora, Florida, how do I call these people? What questions would I ask and how would I find out if they know what they're talking about, Laura and Cliff?
So,
Go ahead.
oh, go ahead. I was just going to say that you definitely want to ask if they've worked with online sellers first. That's the first thing I would ask, because we do find that people that haven't worked with online sellers definitely don't always know what they're talking about when it comes to some of the sales tax issues.
Yeah.
Okay, great.
Another great trick, by the way, especially for eBay sellers. eBay has a lot of discussion groups and chat rooms, for sellers groups in just about every state of the union. Why don't you put a posting up there and saying, hey, I'm a new eBay seller. I'm in Kentucky and I'm looking for an accountant who really gets, online sales. Who's good out there? I guarantee you will get responses, both good and bad, from within that community. And who knows, there might actually be some Kentucky accountants who actually are eBay sellers as well. And that would be really the best person to work with, somebody who not only knows the law, but who also is living the same life that you are.
Excellent. And Laura, that would be a great resource if we can include that. A lot of questions in the question box still. Please don't think we're ignoring you. We are not. We just realized that, number one, you all are busy, and number two, Cliff and Laura are busy as the rest of us and need to get back to work. So we will do that now, but you're asking about the Q&A document, and they were asking about why it wasn't put up from last time. We're going to put a Q&A document together that's going to knock your socks off, okay? We've got the questions from last webinar, or the beginning session, the questions from this one. I think we're going to do some extra work on this, put it into sections, easier for you guys to skim, and then we will put that up on the website, and someone's asking if they'll get an email. If you are subscribed to the newsletter, then Chris Taylor, if you're here and you can chime in, can we send out a special newsletter blast and let them know when all this wonderful Q&A document is ready? Would that be a good idea? And as soon as I'll let Chris chime in on that as soon as he can, but while we're waiting on him, to sign up for the newsletter, make sure that you go to pagemage.com/top rated seller webinars. That is where you can sign up for the newsletter, pagemage.com/top rated seller webinars. Chris, do we have you with us?
You certainly have.
Yeah, can you hear me?
I can hear you now.
Yeah,
so what do you think about that?
Kat, what I can do is take the registration list for the webinar and send out the link and information through that. So yes,
Excellent.
We want everyone to sign up for the newsletter on an ongoing basis, but as a follow-up to this specific webinar, we can send an email out to just the webinar registrants.
Awesome. Chris, you're the man. Okay, Cliff, I've already got one person in the chat room or the question box telling me she's already bought your book on eBay. So thank you for coming.
Thank
and
you.
they were,
and the next time I see you, the autograph is free. I haven't started charging for them yet.
There you go. Awesome. Okay, Cliff is great at all of the books, and he's the only lawyer that can keep me listening and laughing, so I really appreciate him. And another plug for him, if you all haven't checked out Cliff's other website, succeedinginyourbusiness.com, you really should. Some great information there. Cliff, any last words as we sign off?
Nope. The only thing I would say is complying with the law and taxes is a pain in the neck, but don't let it get in the way of a successful business. That's all. Yes, the stuff is complicated, but after a couple of years, you'll get familiar with how to do this. It'll become second nature to you. In the very beginning, it's probably a good idea to hook up with a local expert, either a lawyer or an accountant, who can who can actually give you one-on-one advice and answer the toughest questions, so that you can focus on what's really important, which is selling stuff, finding the right inventory, managing your relationships with customers, and all the stuff that eBay and Amazon care about. I always tell people that complying with the law doesn't put a single penny into your pocket. Yes, accountants and lawyers do charge for their services, but A, their fees are deductible, and B, if they screw up, you can sue them for malpractice. Whereas in just about every state that I'm aware of, if you do it yourself and you make a mistake, you cannot sue yourself for malpractice in just about any state that I'm aware of. So keep that in mind. There is a reason why professionals exist, and these days we're also competitive. You probably can cut deals with local lawyers and accountants too. So don't be afraid to get professional help. It's a lot easier than trying to figure out all this stuff yourself. I have spent the last 32 years of my life, plus 3 years of law school, trying to answer these questions. How much time do you have to become a legal and tax expert?
Oh,
There's
ouch.
my question.
Good point. Excellent point, Cliff. And I love listening to you. I'll talk to you soon. Gonna get you on my new podcast for that. Laura, thank you again for all of your time. We really appreciate you putting together the slideshow for us and all of that. Any last words you want to say as we sign off?
I'll just say thank you all for attending, and I hope we were able to help, and look forward to that Q&A document that's going to be coming out.
Awesome. Bye-bye, everybody. Have a great day, and we'll see you next time.